So welcome again. So today let's say to hidden gold mines at NSE as it of February 2026 and also explain dividend and bonus opportunities so that when you see this coming up in the next few years, you know how to take advantage of them. So right now the market is going up. There is a rally first driven by market recovering from 2025 finance bill. Um, Then we have now ZD coming in. As I explained in the previous video, ZD account didn't have shares, so they are getting the first shares through the purchase, the first purchase, and that have driven demand up, pushing prices up. So there are two quiet gold mines that we are ignoring at NSE. So today I want to talk about Williamson Tea Kenya, WTK, and Kapchorua Tea Kenya, KAPCh. Those are the codes at NSE. First of all, these are not momentum stocks. When you're buying them, these are patient wealth stocks. Don't try to buy thinking in the next two weeks, 3 weeks, a month, or 2 months you will free prices. No, these are for wealth building. And right now, they are just sitting there at very interesting levels, which nobody, I think, have noticed. So what happened? Before dividend, they announced dividend and bonus, prices were a bit high. When they announced, prices went up. So dividend was the first one, price went up to a higher level. Then after dividend closed, prices went down a bit with their dividend amount. It's called dividend dilution. I'll come to all these. Then they had also announced a bonus. Most people ignored this and they sold. So when they saw bonus announced, they came back. Prices went up briefly. Then after bonus closed, there's something called bonus dilution. They gave both of them one share, one additional share for each one you hold. What did that mean? After bonus closure, prices went down by half. So that is the truth behind the price drop. So first of all was dividend adjustment. So after book closure for dividend, prices are adjusted down. This is usually normal. Every share that declares dividend, prices will always go down because money is leaving the company to shareholders. So the new shareholders on next dividend date are not entitled for that dividend. That's why it usually goes down. Then bonus was 1 for 1. So for every one share held, you got an extra share. So what that meant, your share count went up. But then prices needed to adjust downward by half to maintain the same market capitation. It remained the same. That is, your valuation at NSE was not supposed to change. So on X bonus date, prices went down by half because you have received double your shares, meaning prices have to go down by double. Let's go to graphical representation. So notice before dividend, share was trading around 240. This is Kapchorua. So before dividend, Williamson Tea was trading around 240. It went up all the way to 340 now when the dividend was announced. Then it went briefly down to around 300 after dividend. Then after bonus, it went all the way down to around 180. Then because of after bonus, people tried to offload the shares. Now prices went way down. Now at the current level, the screen on the right, on the left that is split into two. We'll come to that when I'm doing each and every stock. Let's concentrate on the graph. This is it as of Friday. Notice prices were fluctuating between 145 and 144. Why is that? Remember, they are ZD traders. They are trading blindly, placing the orders without right information. So they're the ones who are hitting these high prices. As a patient investor, if you are putting GTD, you end up buying at a lower price of 144. And notice that fluctuation. For Kapchorua, before dividend announcement, it was trading above 300. After dividend, it went all the way to 400. Dividend closed, it dropped a bit. Then after bonus, it dropped by half to around 200. Then after that, the share have stabilized. Again, as of Friday, Kapchorua, ignore, let's go to the graph. Around 240, then 246 to 250, meaning there is a 10 shilling difference. Now notice the difference between these two shares. It is the same Friday. One is moving, we are within 1 shilling price. The other one is moving within 10 shilling range. If you're doing day trading, these are shares you can flip prices. You buy in the morning when it is low, then you sell in the afternoon. You have seen NSE reporting market is going up. I'll be coming to this. Market is not going up. They rely on the closing price. Like if you look at Kapchorua, it traded at 250. It shows like the prices have gone up, but majority bought at what price? Below 245. Does it mean it went up? Not with the range we are reporting. I think I'll need to address this so that you start understanding the prices you see and the price movement that is reported by NSE is based on the closing price, not by how each share performed for that day. So let's proceed. So bonus issue and dividend were not a destructive of value. They didn't destroy the value of the companies. It's just corporate action mathematics. Corporate actions here is bonus and dividend. I'll come to all this for each share. So that's what brought down the prices. It has nothing to do with company performance. So most of people panicked after that, and that's why you have seen the prices going down. But they ignore that their share were doubled. Those who didn't sell, they still holding the shares. They still have the double shares. What will happen when the market comes back and the share appreciates in price? So now, why does it look cheap right now? Psychologically, we as the investor, we like comparing adjustments of the prices to old adjustment, the prices before dividend and also bonus, which is wrong. We don't check why that price adjustment came in. If right now these prices go up back to where they were before, these people will be making double. You know what I mean? The prices are around 140 and around 200. It goes to double. You are selling one at 400, the other one at 300. That's double your gains. And you have seen these prices have held steady because these shares, they are not speculative stocks. You hardly find people speculating with them, and they have a tight shareholding structure. That is, most of these stocks are held by retirees who, in most of the times, they don't sell. But remember, these shares are waiting for you. So who hold these two stocks? They are held by long-term investors, people who are looking to grow their wealth. They are also held by retirees who are looking to capitalize on dividends. Remember, shares have been doubled. Their dividend have been doubled. And also dividend focused holders. These, all of them, they hardly sell. So these stocks are usually stable, but they are seasonal. You find they are affected when there is drought. Remember, tea production goes down. When there is rainfall, remember that time tea production is high. So you find there is a point where they report losses. That time people panic. But then at the end of their financial year, you find they are reporting way huge profits. So these are not hype stocks. They don't move fast and they just accumulate quietly. So people just buy accumulating, and that stability can be powerful. So historical perspective, let's look at Equity Bank. Equity Bank, sometime back, they did a bonus in 2007. So for every one share you held, you got 2 shares. So for everyone, you got 2 additional. Then in 2009, they did a split where the prices went down by 10, but shares were multiplied by the same ratio. Meaning for every 1 share, you got 10 additional shares, but price went down just to maintain the same market capitation, but I'll be coming to all these. So prices adjusted down. So for those who panicked, they may have sold. But remember, your share count increased both 2007, 2009. Many thought the value for Equity Bank shares disappeared. But those who are holding today, what's their value? First of all, they have more shares which have been giving dividend. Then there is that growth in price. We have seen it going to, I'll show you in the next screen, prices going all the way to the tune of 70s. And the prices will still go up. Dividends are still flowing because this is a strong bank. So some of these corporate actions, they usually create fear to those who don't understand the market. But this fear still creates opportunity. Let's see why. This is Equity Bank. I use so many sites for research. I don't just rely on one. Notice the price movement. 2007, that's when they did split. 2009, bonus. 2009, they did split, so price went down. If you notice between 2007 and 2010, there's somewhere there's a spike, then it drops. It's because of bonus. But then from there, the share have been moving up to the current price of 75. Those who have never sold, what's their value right now? That is Equity Bank. Let's go to Williamson Tea. Same trade, price going up, at one point hits 200. Bonus dividend drops it to 145. The next thing you expect, if the share goes up back, the people who bought, who had their bonus last year, and those who are continuously investing, it means at one point they will have value back double. This is Kapchorua, again the same trade. Price shoots up to 400, then drops back to 200 because of bonus dilution, but now it's going up. If it goes back to 400 or above, it means those investors there in a very huge profit. So why am I calling this gold mine? First of all, historically they have a very strong dividend culture. I'll be showing all these when I'm now targeting each stock at a time. Then limited speculative noise. You never see these stocks having that speculative movement where you find there is a huge price spike because the price they are trading at limits who gets in. Then tight supply. Not many people sell. Those who buy, they buy for wealth building, either through dividend or just accumulating for retirement. They start accumulating those dividends. So you find there are not many sellers than the buyers. So that's what usually even pushes prices up. And you can easily play with this share because, as I said in the previous videos, one person can move the market. So when you see NSE announcing prices are moved, always ask yourself, is it many investors who are moving the market or is just a single individual? This is not about flipping tomorrow. It's about positioning yourself before the pricing happens gradually. Remember, as Kenyans, we usually get in when share prices start going up. Kapchorua Williamson Tea, you have the opportunity. And let nobody tell you these stocks don't have value, they make losses. I've explained why they make losses. During dry season, remember tea production goes down. They usually export outside. When there is rainfall, that time tea production goes high, and that's the time they usually you find they report profit at the end of the year. So half year you find they are reporting losses. People panic, they want to sell. Those who don't understand the market, that is the time to accumulate. When they are reporting final results, because that's when they give their dividend, then that is the time to get in. Hopefully next year they give also dividend and bonus because it will be a plus. Remember, your shares are still being multiplied. Valuation doesn't change. So reality check. First of all, these two stocks, they are not quick trades. Don't come in thinking you can trade. Though there is a way. When I start tackling now research even for traders, because I want to cover wealth builders and also traders. You have seen there is a way you can play around even within a day or even a week, and you take advantage of that price movement of 10. But flipping, remember, there are costs. So the question is, if over the next few years the price moves back towards the previous adjusted, let's go back to this screen. If Williamson goes from 145 to over 200, how much gain will somebody have? What about Kapchorua? If it moves from 240 to around over 400, how much will they have gained? It's just simple mathematics you do. You make a decision. Do you still want to chase prices or you want to chase these growths? As we usually wait until market goes up, don't wait. These are shares, even if prices are high, you can buy gradually. How? You enter using GTD orders. And for GTD, you need to be strategic. You use this screen here. Let me go back. The blank screen that is split into two: bids, price, and offer quantity. On the app, you find bid quantity, bid price, offer ask quantity. It is the same screen I've taken from online portal for AIB. It's the most important screen. It's only that market is closed out. I've shown you now how you use GTD. The same thing with Williamson Tea, the same screen that is split into two. That's the one you use. And I've said in the previous videos, you usually check where bid and supply are concentrated. So for those who are saying maybe I'm pressing a GTD, it's not going through. It's because you're not checking where supply and bid are concentrated, where the highest quantities are. If you're putting a GTD for just 1 day or two, that order will not go through if you're pricing lower prices. If you're targeting lower prices than the current strongest demand or supply, you have to give it a week. Why? Remember, these days, ZD people are buying through market orders. These are people who don't understand the market, so submit market order. They submit a market order when other orders for fund managers and foreigners and big investors, that is high net worth, have not come in. What will happen? They will clear your lower price. This explains why this graph is the same day graph, but there's somebody who bought at 240 before foreigners came in. Foreigners came in, blocked the market, so it traded at 246. After lunch hour, they usually start clearing their orders, so it hit down lower prices again. That time, now another person comes with a buy order for a market, and supply side have cleared, so they hit the high price. That's why indicators of NSE going up, they are based on closing price, which is wrong. It should be on the average price. If it's not average price, you have seen all those graphs. They are usually indicative of the closing price, which may be misleading. Let's go to Williamson Tea. The same thing. First of all, 145, somebody hits because you want to buy at market, then that's the time orders are coming in. Then you clear, then prices start to go down. Then stabilizes up when foreigners and institutional come in high net worth. Then as market closes, notice prices go down. Then orders, as they clear, because that's what we forget, from two orders, people start cancelling their orders. That time, that's when you want to place a market order to buy. Remember, on the sales side, most people don't cancel because they still want the high prices. You'd end up hitting the high prices. So closing prices are not indicative of market, and I'll come to all these videos so that you understand when to take advantage. So GTD works when you leave your order for some time. It's not 1 day, 2 day. Give it a week. And be patient. Don't try to rush with the prices, even if they are going up. I've said these people who are coming in the market these days, they don't understand the pricing. The person who went live with ZD was not actually there when you are developing. I was there with one of the staff members from AB Access. So we know what was developed and what was not developed. That system has so many loopholes and gaps. If you're not careful, you'll be hitting high prices. If you're chasing prices, if you're chasing GTD, you still hit high prices or miss. You need to understand those two screens that I've shown you. The graph and market depth. In ZD, it is order book. So use good till date orders. You are putting order valid for some number of days, target low price. So set disciplined entry levels. Don't try to go too low. Check where demand is. It's a matter of just looking even that graph. You can tell whether your price can hit. If for the last few days you have seen it's not hitting the price you're targeting, then there is no need of putting that price. Then target value zones. Have a price range that you know this price range is within the price I can take. If you don't have, just be good, go for current prices, the high prices. That time you'll be chasing market. I've said you'll end up hitting prices. The market cannot continue that forever. At one point, it will do somersault. Remember, broking, bid, side, prices start shooting down. What will happen? And you want to sell at high prices. So learn to accumulate slowly. If you want to make wealth at NSE, accumulate slowly. Don't be in a rush. Don't chase prices. There is nowhere market is going. Market will go up and then come down. What will you do? Unfortunately, these prices, you see the noise that is out there. People are marketing for their own tenor. They have to show they did something. Do you still want to be used as an example? It's money you're putting there, don't forget. I don't want to talk, I usually don't like talking politics, but at some point you may find I deviate because you need to know some of these things. I've seen the reports that you see from NSE market is going up is based on closing price. And you have seen what happens. Share could be trading at a low price. Then they are reporting the spike at the close of the market. They know all these things. So if you want to position yourself, enter near strong zones, support zones. That is where the demand is concentrated. If you are buying, where there is a huge quantity. That is if you want within the shortest period. If you are patient, you can even put lower. Those huge quantities are placed by fund managers, institutional who don't give good till date. Their orders must be refreshed the following day. So avoid chasing green candles. When you see market is green, stop chasing those prices. You are buying at high prices. Understand pricing and how to enter at low prices. Be patient with fears, even if it executes small quantity. Those who have reached out and we have placed the orders, you have seen how it works. You just leave it, you forget. You come one day, you find it have executed. There is nowhere your money goes. There is no charge for placing orders and it is cancelled. If you're not able to get that stock, go to another one. There are so many value stocks at NSE. So patience is the one that helps you build wealth. Don't try to chase prices. And remember, all these notes are available on my blog. I'll leave the link in the description, and many other notes that will be available there. I'm also developing e-booklets targeting all age groups so that even the young ones start running investment at early age and they avoid some mistakes we have made in the past. You don't want your children to come and start hustling outside. And you know that's where now Shyrocks are waiting. Don't let your children go through that. Let them start running investment at early ages. So in the next one, now we go deep research for each stock at NSE and start finding various stocks and how to use GTD for each stock, starting from the top all the way to the bottom, including those penny stocks, so that you understand why you don't need to chase prices. And remember, this is free education, including live trainings. I also do support, and also if you have groups which you don't be trained, I always do for free. Unless you want to support, I usually don't charge. We can always do online. It is you to make that decision. It's usually free education, which As we continue, if you're finding value, you can always support through that Pesa or Pochi to bring my name. Thank you. Let's meet in the next one.